Yes, what's up guys? Welcome to a new video, and in today's video I want to go over a setup, over a trade I recently took and I'm still in. It's a grade A setup, it's a Wyckoff setup, it's a mechanical setup, and I want to talk about why I took it and basically go over all the parameters I looked at to enter this trade. So let's get started right away. All right, so we are here at the Euro Aussie. This is one of the pairs I trade. This is one of the pairs where the statistics are in my favor in terms of mechanical trading. And I just really like to trade this pair. Now, I took a short position, but first I want to talk about this because this is just clear reaccumulation. And a lot of people always ask me, how do you determine if something is accumulation or distribution or redistribution or reaccumulation? It's quite simple. I look at, as soon as a range is developing, I look at the boundaries of a range. In this case, it's here and here. Now, what I look for is what happens once price breaks either the lower end or the upper end of the range. And I want to see absorption of liquidity. So as soon price broke above here, you can see we got rejection and a move to the downside. Again, as soon as price broke this high, we're going to move to the downside. If we are going to zoom in right now, and we are taking a look at this area. We got one unbroken low here, one unbroken low here, one unbroken low here, one unbroken low here. So you can imagine that at the lower end of this entire range, there's a lot of liquidity. So what I'm interested in is what happens once the liquidity at this area gets triggered. At this day, it gets triggered. And look at the bullish close. To me, this is clear absorption of sell side liquidity, and this gives me a bullish bias. And as soon as structure breaks, which is here, I have a bullish bias for the next day. This confirms to me reaccumulation and not distribution. And then you can look for different type of entries. Usually this is the best entry because this is the last high before the massive move to the upside. You can also call this demand or whatever people call it these days. This is how I look at reaccumulation and distribution. Same goes for here. Swing low, liquidity is absorbed below these important lows. Strong bullish close, break of structure here, bullish bias, and you can find your entry how you want to trade it, but that's just the basics behind reaccumulation and distribution. Now let's go over the trade we took, or at least I took, in the Euro Aussie. First of all, we are at a bit of structure here. As you can see, lows, 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 supply area, high taken out. So a lot of important points on the chart. Now, this is the high of the supply area, and this is a very important supply area because this is what started the entire move to the downside. You can see it's important because as soon as we hit supply and broke this high, we immediately got a rejection. Even though we had reaccumulation and a bullish bias, you can still see this is a very important spot for selling. Now, we took out the high of the supply zone. And then if we go to the hourly time frame, what do we have here? Clear distribution. Why? First of all, the location, so the daily supply zone. Second of all, clear buying climax, which forms the top of the range. And then what's interesting is we get another move to the upside. It doesn't break the high, which means there will be a lot of liquidity generated above the high. And we've also got the lower end of the range, where there will also be a lot of liquidity generated. Now, as soon as the high broke, the high of the range broke, we got our UTAD in terms of Wyckoff, excuse the writing. And then we got this clean, strong move to the downside. As you can see, during the entire uptrend, we didn't have these type of moves. This one was already a decent change of character. And then again here. So this shows me there is being distributed. Sellers are gaining control. Sellers are scaling in sell positions. And then I want to see, like I said before, I want to see what happens with the liquidity at the other side of the range. And as you can see, there's a clean break below the range. There is some rejection, but a clean break. Instead of this violent move back, we now got a clean break and we stayed here. Now that gives me the clue that this is distribution. So I want to be short. Now, if you guys are familiar with this, with my trading, this is the last bit of structure that broke. This is the point that's interesting to me. On this candle, distribution is confirmed for me based on my statistics, which I will show you right now. There we go. Based on my statistics, there is a 58% chance of hitting the lower green line before taking out the high that's formed yesterday. So slight edge, also slightly in my favor on this trade. But in terms of location, this is just a great way. And if you know me, I trade mechanical. I used to trade fully mechanical, but now I have been trading this method for a few years and I'm implementing some form of discretion in order to increase performance. So as soon as this area broke, which is over here, I entered short, targeting this area. This to me is the last bit of structure. Stop went above here. Again, you won't see the orders on this MT4. This is an MT4 account. This is what I use for analysis and I execute on a different platform. Let's put in the risk to reward ratios on this particular setup. Entry, stop, target. So the target is around 1.7 R and there's a 50% chance of making 1.7 R, which if you take this setup over and over and over again, you will make a decent money in the long run. So clear distribution. I'm still in a trade. I don't manage my trade. So it either is going to hit my stop loss or it's going to hit target. And it might even do something like this and then go down. I don't care. I know the odds are in my favor in the long run. I know if I keep taking this trade over the long run, I will make money. So I'm just comfortable sitting in this trade. Now, why is my stop loss going up here? Because this is the last bit of structure. And if this structure doesn't hold, 95 out of 100 times, this high is going to break. But if I move my stop here, the risk reward increases. As you can see, normally it would be a 1-to-1 and now I got 0.7 R more. So this is more profitable for me. Again, this is all from journaling and testing and testing and testing. But this is the last bit of structure that price might retest before going down. And this is my invalidation point. And just one quick tip. Place your stop at an area where you are wrong on the trade. So don't place it just because it fits your risk reward, it fits your money management, it looks good. Whatever the case may be, place your stop at an area where your idea is wrong. That's the best place to put your stop loss because you want to be out of the market at a point where you are wrong. This bit of structure is the last bit of structure that can get tested, in my opinion, before the setup is invalid. That's where my stop goes. It lines up with my journal. It lines up with my statistics. That's what I do. So yeah, this is a clean Wyckoff setup for me. So to give you a bit of a recap, first of all, we broke this supply zone, the high. We are at a massive level over here. So you can expect selling to happen. We got a clear buying climax because if you are familiar with the buying climax, you can see steady trend. And then all of a sudden, very aggressive move to the upside. And this usually gets people to buy because they see a big green candle and they buy. That's when there's a lot of buy side liquidity. That's when you will see selling from the smart money or whatever you want to call it. So clear buying climax, clear change of character, big strong retracement, which we haven't seen previously during the uptrend. Range forming, liquidity generating, the high doesn't get broken, so even more liquidity. Clean UTAD, clean break of the lower end, statistics in my favor, and off you go. This is how I apply Wyckoff. If you are interested in this, you can sign up for a free training. Link is below in the description. And you can also leave a comment if you have any questions or whatever the case may be. And I would really appreciate it if you leave a like, comment, subscribe, because more is coming soon. Yeah, stay tuned.